Tim is a professor of finance and holds the Arkansas Bankers Association Chair in Banking at the University of Arkansas. And he has a lot of responsibilities, including teaching and writing, research, and outreach to Arkansas bankers. And so we are super excited to have him here. He has provided for us in terms of workshops before. And so I'm super excited to see him provide here again on this topic. So Tim, I'm going to pass it off to you.
Well, thank you, Stacy, for the introduction and for helping me to arrange all of this. And I'm glad to be here today. And so I want to find out just a little bit about you before we begin. And so if you don't mind, I'm not going to force you, but if you don't mind, and you are fully dressed and so on, go ahead and turn on your camera, just so I can see you for a moment and get a little bit of information from you. All right, thank you. Okay, so let me ask you this. How many of you are undergraduate students? Raise your hands. Okay, so close to half probably. And then how many are grad students? Okay, we've got just a few hands there. How many are neither undergrad or grad? Okay, and let me ask you, Alan, let me ask you, you raised your hand. And so are you a professor or what is your occupation?
Yeah, I'm a professor of electrical engineering.
Ah, fantastic. Okay. How many of you have started a business? Oh, impressive. Okay. You're ahead of me. I have not. I've been a wage laborer, salary laborer all my life. So I'm impressed with people who have that creativity and take the risk to go on out and start your own business. And, you know, it's, I'm sure, just a fascinating experience and, you know, one that you put your heart and soul in order to get to work. So, and so what I am here to help you with today, well, let me ask you one final question. How many of you have had an accounting class? Any at all? Very good. Okay, I lied. That's not my final question. How many of you are business majors or minors? Okay, so maybe a lot of the same hands went up with those questions. And so we have a fair number that have had at least accounting one, right? And maybe more than that. But we probably have several here that have not had any accounting, or maybe one course. And if you were like me as an undergraduate, not everything sunk in after that first course, right? So what I am trying to do in this workshop today is to give you an overview of the financial steps that you will want to go through. And obviously, my example is going to be simplistic. The world is far more complex than what I'm making it, but it's going to take you through the basic ideas of projecting an income statement for your company, projecting the balance sheet, projecting the cash flow, and talking about various sources of finance. Now, you know, this is not a master's level seminar, so to speak, so we are not going to do deep dives into anything. But having said that, especially for your business students, if you want to ask deeper questions while we're going forward, or you have other comments, insights to add, please do. And for the non-business students, the same goes for you. And you may very well understand a lot of this material. Feel free to ask me more complex questions. On the other hand, if you haven't had accounting or much in the way of finance, then there might be things that are confusing to you that seem a little bit basic for those who have had some of the business background. And so don't be afraid to call out, ask questions, stop me. You know, we'll try to make this as interactive as we possibly can as we go through. So you will not offend me if you just shout. Okay, so you go ahead and ask questions or interrupt or say, I don't understand what you're talking about, or I have an example of this. Here's what happened. So please do that. It makes things more interesting, I think, for everybody when we have that interactivity. And Stacy, if you could also help me monitor the chat. And so maybe you can join in and say, because I'm really bad at that. I'm like, I think I'm the least observant person in the entire world.
You bet. I'll
And
help.
I have a hard time, like, my wife can change the curtains or the furniture in our house, and it might take me a month to notice. And so it's really kind of pathetic, really. But anyway, that's part of my characteristic. So I get too involved in the presentation, and the chat button just sort of disappears on me, and I don't always see it. Okay, so any help I can get with that would be wonderful. All right, so no need to keep on your cameras unless you want. Of course, I would love to continue to see your faces, but I know for at least an hour presentation, sometimes that's hard to do. So you can fade in and out on your videos as much as you would like, and I am going to share the screen and we will start the presentation. Okay. All right, so if you cannot see the presentation well right now, please let me know. It should be pretty clear on your screen, and you see the title screen, Is Your Innovation Financially Viable? Okay, so that's our focus on, you won't know if your innovation is financially viable until you get into business and try it out. But hopefully what you're going to do is take a lot of time and careful thought and planning in terms of trying to assess the viability of your innovation or your small business or whatever it happens to be. And you usually have to convince others as well that it's financially viable, because you may want to borrow money. And so it's important that that be the case. Okay, so what are some of the objectives today? We want to understand how financial planning, which is what this is all about, fits into your business plan. We want to introduce some financial tools, and again, balance sheets, income statements, cash flow, to assess the viability of your project. We want to, or will, build a projected income statement and compute break-even production. And as you'll see in a few moments, we're going to use a business that I told my wife that maybe she should start up someday. She's not going to. That's not something she wants to do, but she could do it, and I think she could do really well. Build projected cash flows and balance sheets. Assess your need for internal versus external financing, and then understand the advantages of equity versus debt. And again, stop me if there's anything else you want to go deeper into, you have questions about, you have comments about, please feel free to introduce your thoughts and questions. All right, let's start with a hard question in many ways. Is Tesla financially viable? So I have given a version of this workshop a couple different times over the last few years, and the last one was probably 2018. Right, so maybe a couple of years ago I gave this, and I'd say the answer was a lot different than perhaps it is now. So we're going to go through Tesla and some of their financials in just a moment. I'm curious though, if there's anyone who wants to comment, speak up, tell me what they think. From what we know today, is Tesla financially viable? Are they going to make it over the longer term? What do you think? Thoughts, comments? Oh, go ahead.
I said I'd say so, because they're
Okay.
differentiating their product line with commercial vehicles, and then cheaper vehicles for the masses, and then also sports cars, which pretty cool. I like.
Okay, product differentiation is a big competitive advantage that they have, although that will be eroding over time with more competition. But at this moment, they're the player in the game in terms of high-end electric vehicles. And moreover, in terms of their financial performance, it has been, I would say, not good at all. And it's only beginning to become slightly good. And yet the market has rewarded them with a lot of favoritism, I guess you would say, a lot of encouragement. And again, we'll take a look at that in just a moment. But if you're going to be viable with your business, how is your product going to be different from competitors? You have to know the market. You have to know what the business is that you're getting into and why you can do something different or better than competitors have done. Eventually, and it depends on your financing, your support, I guess what type of business you get into, you have to earn consistent profits. And that could take a long time. Amazon didn't make profits for maybe about 10 years, really. And Tesla did not make a profit until last year. And even then it was very small. So over time, you have to earn either, well, you have to generate more sales and you have to be able to charge higher prices or lower costs. And you need to be consistently profitable. You can have bad years, but you can't have a string of bad years. You have to have sufficient cash available to meet your expenses, either through cash from your profits, which we'll call retained earnings that you keep in the company, or additional financing, external financing. And you eventually become solvent so that your assets exceed your debt, your liabilities. Okay, that's what Tesla has to do. And that's what any company that will be financially viable have to do. And so, does Tesla differentiate its products from its competitors? I'd say yes. They are the high-end luxury market, even though some of their cars are not priced like a high-end luxury vehicle. And they're branching out now into perhaps the pickup trucks, even though it didn't look much like a pickup truck when I first saw it. And they're also getting into other areas as far as commercial trucking and so on. And I think they're making a couple more models of their basic sorts of cars or even high-end cars. And I think they're having one that is going to be sort of a very elite sports version. And so they are working hard at differentiating the product. They certainly are now, which gives them a market niche. Okay. And will they earn consistent profits? Well, as I mentioned, they had not through their whole history. They kept losing money. In 2020, they finally, these are in millions, they finally made, I guess, $1.9 billion of profit. And you say, oh, that's a lot of money, but they lost that amount in the 2 previous years. And so on net, they are still deep in the hole in terms of their losses versus their gains. And so how are they still in business? And I can't recall, but I think they started in about 2010, maybe 2012. Brandon, maybe does that sound about right? Okay.
I think it was 2010.
2010, okay. And so for that string of years, they lost a lot of money. And only finally have they started to turn the corner. Is it sustainable? We don't know yet, but at least they seem to be on a strong track. And so how have they done it? Well, the total revenue has been consistently increasing, and it really took off in the last couple of years, 50% gain basically between 2018 and 2020. And their gross profit, after we subtract their so-called COGS, the cost of goods sold, 6.6 million, and then all the other expenses that are added in there. And these other expenses don't seem to have gone up much relative to, in fact, they've gone down relative to their total revenue and their increased sales. And so they've been able to generate this positive net income. If these trends continue, this will get larger, but it still is not an enormous profit margin for this company. Okay, they still aren't earning a lot of money relative to the scale of their business. More importantly, in terms of the financial viability, how are they meeting their cash needs? And what we have here is a very basic cash flow statement. And cash flow statements separate the sources and uses of the cash into three components. And the first is the cash from operations. And so in terms of Tesla, what are their main operations? They are producing cars, getting the raw materials together, constructing the cars, marketing the cars, selling the cars, and that is their core operation. And so you want a firm from its core business to be able to generate profits. And those profits will ultimately lead to positive cash flow from their operations. And then, but if you think about the cash flow statement, think about how you as an individual can generate cash. Okay, and there's three ways you can generate cash. One is you can have a job, and so you earn income. Think of that as your cash from your operations, right? Or cash from your employment. And in general, that's going to be the most important as you go through your life, as far as your own cash flow. You also can have cash from investments. And maybe you have set aside cash in your checking account or in savings accounts, or maybe in mutual funds or in stocks, liquid investments that you can tap when you need them. And so selling assets, right, or storing cash somewhere else gives you cash from investments. And then if you need to borrow, you can borrow from bank via credit card. You can have student loans. You can have personal loans, automobile loans, mortgage loan, whatever, in order to generate cash. And again, if you are not generating cash from operations, from your main core, in your household case or your personal case, your main job, then you have to sell assets and raise debt, borrow. Well, you're not going to have, unless you're very wealthy, you're not going to have a whole lot of assets you can sell to be able to generate cash over the long term. And you can borrow, but at some point, you'll have no income to repay that borrowing. And then all of a sudden, you'll be cut off from your financing sources. And so cash from financing is also limited. There's only so deep of a liquidity hole you can go into before people will quit lending you money. And so cash from operations is key. And in 2020, Tesla finally generated positive cash flow from operations. They lost cash flow, or their cash flow was reduced. They had net cash outflow from investments, which means that they were investing in the company. Instead of selling assets, they were buying assets on net. And then as far as borrowing, or I should say financing, 9.9, almost $10 billion here in terms of new financing. And they had a $12 billion capital raise last year through equity, new equity issues. And so they raised almost $10 billion on net. They used a lot of that financing, by the way, to pay off debt that they had already. And then they took on a lot more debt as well, I think 8-9 billion last year. And so what was their change in cash? Positive 13 billion. And that is a real turnaround for Tesla, because not only are they generating profits, they are able to, instead of burn cash, they are able to generate cash. And again, will this sustain? We don't know into the future, but the trend looks a lot more favorable. When I gave this back in 2018, I thought that Tesla was not going to make it, and they have proven me wrong. One thing, however, to note. So in their 10Ks that they file at the end of each of their fiscal years, they go through all their financials and release a lot of information to the public. And one quote that was in there in terms of their cash flow: "There is no guarantee that we will have sufficient cash flow from our business to pay our substantial indebtedness, or that we will not incur additional indebtedness." And so they are saying up front to prospective investors and any kind of analysts that, hey, we even agree we are not out of the woods, and we haven't generated the type of cash that we need to be sustaining our operations over the longer term. But what does the market think? Oh, one more slide. I'll tell you what the market thinks in a moment. You also want to see debt not rising, all right, at least not rising too rapidly, and you want to see cash increasing, or at least not falling so much. And what you see here from 2017 is that their long-term debt levels haven't increased that much, and in fact, they even fell in 2020 slightly. But their cash really took an upward shift between 2019 and 2020. So all these are positive trends, right? You go back and you say, well, they're making income. They are generating cash, and their debt doesn't seem to be increasing at least as rapidly as it did before, but they still do have a lot of debt. Are they solvent? On the books, they are, and certainly in terms of market net worth, they are. On the books, they have about $23.7 billion in net worth. And net worth, for those of you not with no accounting background, they're assets, and assets are things that you own that have value, right? So you own these things. And so Tesla owns $52.1 billion in assets. Liabilities are things that you owe to others, and they have 24.5 billion. They have the difference of their equity or the net worth, 23.7 billion. Okay, and then there's also market value. And the market, as you probably know, has been insanely good over the last 9 months or so. We took a big dip right when the pandemic first hit, and the market it had quite a correction. And then it has gone on quite an increase. And so you can see Tesla has followed that trend, and even more so, right? Even exaggerating what the S&P 500 or so, or NASDAQ has done over that time period. But it has dropped off over the last month or two, right? So the stock price has declined, but it's still at $675.50. I don't know what their ultimate market valuation is, but from a scientific point of view, it's really, really high, right? That's my precise estimate of their market value. And the market believes in this company for whatever reason, either because it's cool or whatever the reason might be. And so when you think about where Tesla is going, why was it able to lower its long-term debt and raise the equity? In part because the equity financing right now is really good, and it's relatively easy for these people in publicly traded, or people who want to go public, to be able to raise funds. If the market was super tight, if they weren't able to raise equity financing, they'd be in a lot more trouble right now than they are. Okay, so I am going to tell you about my business plan. And this is something, so I have 4 children. They're all grown. My youngest now is a junior here in college, and she's an accounting major. And so I asked her if she was going to take this seminar. She said, no way. Of course, I think she would have said that no matter what, right? But in any event, it turns out that all of my children and my wife all have gluten problems. So I'm the only one in the house that can eat gluten. And that's good and bad. That means that when we have treats and so on, I can eat them all up. And I get them all. No one else touches them. Bad thing is I eat all that crap, right? But also we have less of that around because more and more things are gluten-free in our house, the vast majority of things. But it's gotten a lot easier to buy and make gluten-free meals over the last really 15 years. And so my wife's a really good baker, really good cook, and she really likes to make desserts. And she's really good at the icing and all that. And I kept telling her, why don't you open up a gluten-free bakery, or at least a bakery that does both, right? Normal cupcakes, normal treats, and then also gluten-free. And people, friends of my children and so on, that come over to the house and they're eating gluten-free cupcakes and they don't know it because they say, oh, this is really good. It tastes really good. So I tell my wife, hey, you should go into business. And she says, there's no way I'm doing that. I'm not getting up at 3 a.m. every day and going into work and doing all that baking. So it's not going to happen. But I will say this, that leaves it to all you creative innovators out here. Here's an untapped market in Fayetteville that you guys can tap, right? And there's some of this going on, but there's no one who really specializes in this in terms of kind of a true bakery. So in any event, my plan is the following. I'm going to open up my bakery January 1 this coming year in 2022. And it's going to specialize in gluten-free cupcakes and other desserts. Each cupcake, just as for simplicity, we're going to limit 2 cupcakes, but each cupcake costs $5 to produce. And I'm going to sell each one for $10. And I'm going to make $5 profit on each cupcake. And I'm going to sell 10,000 of these things in Fayetteville per month. And I'll make $50,000 every month. I am going to be rich. On the other hand, am I being realistic? This doesn't seem very realistic to me. $5 cupcakes, maybe. There's not many people who are going to buy a cupcake for $5. Maybe $3, right? Sorry, and that's even the cost. $10 cupcake, forget it. No one's going to buy a $10 cupcake. And I'm all of a sudden going to sell 10,000 of these things per month? Yeah, no, not going to happen, right? So what we need to do is to go through our projections and make sure that these things are realistic. We're setting realistic prices. We have a good idea of what the expenses can be so that we can project these things forward. So the way you do that is you come up with a business plan. And a business plan, if you haven't started one or ever done one in a class, it is a report divided into several key sections that helps you to organize all your ideas, your strategies, your financial projections, everything that's important about your project or your business. So it's a document that is your guide to where you're headed. It's also something that oftentimes you use as a pitch to investors when you're trying to raise money. Key components, products and services. What are you selling? What are you doing? What are you producing? How are you going to market? How's your operation going to run? How are you going to manage this, organize it? And what's the financial planning going to be about? And of course, that's what we are going to focus on here. Okay. All right. So once again, we need to differentiate our product. And my cupcakes are different from competitors because they're gluten-free and I am a great baker. And by I mean my wife. I'm a terrible baker. My wife's a great baker. And so she can make quality bakery goods, right, that are gluten-free. No bakeries in my area specialize in this. So it gives me some market power and I can price above costs and make some profits. Even if new competitors emerge, my product will be unique and better than others. Why? Because you can't replicate the baking skills of the owner, right, of my wife. And so, that competitive advantage will remain. And if you think about Tesla, why does their comparative advantage remain? In part because they are so far ahead of the crowd right now in terms of how much better their product is. And even as it narrows, they still have that cachet of being first. And they have that cachet of being, a very cool, high-end electric vehicle company. Will I earn profits? Okay, income statement is critical, and this is something that you must project out, and it has several key elements to it. But in the end, a lot of these things, just as a way to organize the thoughts that are already in your head, the thoughts that are already there, and you're saying, well, okay, I have to sell so many, and here's the price, and how many am I going to sell, and what are my costs going to be, right? So you're thinking through the project, and you need to, when you start to put numbers down, the nice thing about this is you can't just make up your numbers. You must think carefully about what the numbers might be. And of course, there's going to be error. Of course, you're not going to forecast it correctly. And of course, as you start your business, you are going to want to update this as often as is necessary and revise based on reality. But in my projections, when I start January 1 next year, my net sales, I'm going to sell each cupcake for $3. And I figure I'm going to sell 100 per day on average in the first year. In the second year, I'm going to sell 200 per day. Okay. And so multiplying 3 by 100 per day times 350 days that I'll be open in the year, I get $105,000. There's my revenue from my sales. It's going to cost me $1.25 for each cupcake. And that will include the raw materials that go into that, and that will include the labor of the people that are actually making the cupcake. Okay, so the things that we'll call, and we'll see this later, the variable costs. And so that's going to be, to make 100 per day, is going to be $43,750. And then it jumps up again, it doubles in the next year. My gross profit is net sales minus my cost of goods sold. And this is the most rudimentary, I guess, measure of profitability for the business, because it's not accounting for any kind of overhead costs, other expenses that you have that don't change directly based upon how many cupcakes you make. These two items are changed with every product that you make and sell. And so here's your gross profit, $61,250. And then we subtract a lot of these other costs, the cost to sell these things, the rent of the building, accounting services, marketing services, as we'll see here, equipment. At least we're going to depreciate the equipment. So we're going to buy $25,000 in equipment to begin, oven, washer, dryer, sink, counters. And it's a pretty good deal for $25,000, right? And yet what we do in accounting is, even though we buy $25,000 of equipment, those go on our balance sheet as assets. And the expense part comes from us depreciating those assets over time. And so we're going to depreciate these things at $5,000 per year over 5 years, let's say. Okay. And then we're not going to have any tax. And that's because we're not going to make any money. And so when you add up the net sales, your revenues, less the cost of goods sold, less all of these other expenses, we are going to lose $33,750. $750 in the first year. In 2023, because our sales double, but our costs don't double, most of them, we are going to make a profit of $27,500. Okay, so that's the initial projection. And it's not just made based on wildly optimistic numbers. It's based on careful thought, analyzing the competition, what they already do. What does Rick's Bakery in town sell its cupcakes for? All right, what are the costs? How many workers do they have? You can try to estimate those things. Doing a lot of research, talking to a lot of people. And an important analysis, and you do this in managerial accounting, is you do what's called a break-even analysis. And so now you're going to ask yourself, how many cupcakes in 2022, but you could do this for any period of time, any year or any month, do I need to produce to break even? And not just produce, right? You have to sell them. So how many cupcakes do I need to sell, really, so that I will break even? And the key here is you set the projected revenue equal to the total cost. And you have to do a little bit of algebra here. And so the total revenue is $3 times, and we'll use CC for the cupcakes, times the quantity of cupcakes that you sell. Okay, so 3 times cupcakes. And we'll put that down here. This is in our break-even equation. So 3 times the quantity of the cupcakes that you sell equals the total costs. And I referred to this earlier. Total costs are your variable costs plus the fixed costs, the overhead. And going back to the income statement, the variable costs mostly are contained in the cost of goods sold. And the fixed are going to be down here below that, right? The selling, general, administrative expenses. You've got to pay an accountant to do your books and do your taxes every year, whether you sell more cupcakes or not. You have to pay your rent every month, whether you sell more or fewer cupcakes. We have depreciation on your equipment, right? You have to pay that, whether you use the equipment or not. And so we have here rent, salary. Now the salary is not going to be the labor to produce the cupcake. It's going to be all the other overhead salary, right? Managing, supervising, whatever it is, people who are doing the marketing. And then administrative expenses, and then the equipment depreciation. Okay, so we have all these fixed costs. And what we'll do is we'll add together the variable costs and the fixed costs to get total costs. And so the total costs are $1.25 times the quantity of cupcakes that we end up selling, plus our fixed costs. And all those fixed costs sum to $95,000. And so again, an algebraic equation here, 3 times the quantity equals 1.25 times the quantity plus 95,000. We simply solve for our quantity. We get 54,286. Now we have projected, where was it? Oh, I guess I didn't have it back here. But you sell $100, you sell 100 cupcakes, 350 days, and you will sell 35,000 cupcakes in the year 2022. So we are clearly below the break even. And we're going to need to sell another 20,000 almost just to be able to break even, given these costs. Okay, questions about this? Any questions, comments about anything? Okay, so if you do, please shout out. Will I have enough cash to survive in the first year of business? So you have now realized you are going to lose almost $34,000 in your first year. Where is the money going to come from? And that's why those who start up their own businesses, and take this risk, boy, it's fantastic. And it's, you have what's the right word? A lot of guts is a good way to say it. You have a lot of belief that your business is going to make it, you're going to do it, and you have to put the money down in many ways in order to get that to happen. Okay, so I think it's wonderful. And most businesses, most people who start their own business are wildly optimistic, sometimes overly optimistic, but maybe that's the only way you can do that, right? If you're more of a pessimist and everything's always going to fail, and that's why I'm a terrible investor, because the market's always going to go down. It's so overvalued that it's always going to go down. And so, I don't put the money in when I think it's too high, and then it just goes higher, right? So I'm a bad investor, and I know that, right? So I don't have to deal with that. But in any event, you have to have a lot of hard work, a lot of discipline, a lot of optimism to make these things go. Will I have enough cash to survive in the first year of business? Well, it turns out that we have been saving, and we have $60,000 saved up of our own funds that are maybe in a mutual fund or maybe in a cash account somewhere. And that is going to be what we use to start the business. And so where is our cash going to come from, and what is it going to look like after the first year? Well, cash from operations. And so again, if you're rusty at accounting or haven't had accounting, you might want to pay closer attention to this. The cash from operations comes from your net income. And I'm simplifying some other terms here, but basically your net income, which is negative $33,750, plus your expenses that are not cash items. They are non-cash expenses. And what is a non-cash expense? Well, depreciation expense is one. And so I bought $25,000 of equipment, right? And I had to pay out for that $25,000. So that was a cash outflow that we'll talk about. But it's not all an expense. Accounting rules don't allow me to expense all that. And so I'm going to expense depreciate it over 5 years. And I write it down after the first year. So it was worth $25,000. Now it's only worth $20,000, in the same way that a vehicle might depreciate over time. And so I have $5,000 in depreciation expense, but this is not cash, right? I don't pay anyone $5,000 to mark down my equipment. And so what I do is I take my negative $33,750 in net income, and I add back in the $5,000 in depreciation. And that's my negative $28,750. So there's my operating cash flow. What about investments? Buying, selling assets. I have bought $25,000 in equipment. And so there's my cash from investments. And this only thing saving me here is my $60,000 in financing. And so at the end of the first year, at the end of 2022, my $60,000 will be transformed magically into $6,250, right? Well, that doesn't seem so great. That doesn't seem like it's a good deal, does it? So you put $60,000 in the end, you only have $6,250 in cash. But that's 1 year. And if your business survives and you keep going and your sales increase and your costs, relatively speaking, drop, then you can generate more and more cash, right? So it's the flow of cash over multiple years that is going to make your business successful. So the balance sheet reflects what we just talked about in terms of having income losses and having equipment investments, and then finally having the cash balance at the end of the year. So at the end of the year, our assets are cash, $6,250. We have equipment of $20,000. Why? Because we paid $25,000 for it, but we wrote off through depreciation $5,000. So we have $20,000. And then total assets are $26,250. And so we have no liabilities. And because we're not going to repay ourselves for that debt, right? This is equity that we have put into the business. So we have $26,520 in equity. Questions about that? Either I'm being really clear or you're so lost you don't have good questions, but that's okay. All right, so here's the equity. All right, so at some point, I'm going to want to grow my business, or I may find out, if I go back to my income statement, I may find out that I have grossly overestimated the increase in sales. And I may find out that 2023 is a losing year as well. Or I may decide, man, it's growing faster than I thought, and I need to move into a new building. I might want to buy my own building. I have to buy a lot more equipment. And so I have a lot more cash outlays. And there may come a time when I need to borrow. Okay, first of all, if you're starting out a new business and you go to a bank and you say, hey, I have this great idea for this gluten-free bakery, and I'm going to rent a place, and I'm going to buy equipment, and I need to borrow $60,000. And the bank, pardon me, their first question that they ask is going to be, okay, how much of your own money are you putting in? And the reason they do that is because they want you to have what we call skin in the game, right? So you think about, we as football fans sit on the sideline and say, how come that linebacker didn't tackle that runner? Well, it's partly because the linebacker might weigh 220 pounds and the running back is 260 pounds and runs a whole lot faster and is a whole lot stronger. So it's sort of like when the Razorbacks play Alabama, right? That's the idea. How come our linebackers aren't tackling their fullbacks? Well, if you were out there, would you tackle them? That's a lot of hurt, right? And so you want skin in the game. And the way to get skin in the game is that you invest your own personal funds. The bank wants to know that if this firm doesn't succeed, you personally will be losing funds also. Why? That makes your effort a lot harder, and it makes you willing to sacrifice more personally for the success of this business, because you've got your own funds at stake, right? So you're not going to get anywhere in terms of starting up your own business unless you save up or can maybe beg, borrow, and steal money from your family or something like that to get some funds started. Okay, so and we call that internal financing, right? And internal financing is coming from your own funds. And then also, as your business does generate profits, instead of paying those out as dividends to yourself or to other owners of the company, you keep those profits in the business. And those profits turn around and generate cash, right? Cash flow you can use to invest. And so those are sources of internal financing. And if you have enough of those, you are in good shape, right? But a lot of times you need to step outside that world and you have to use external financing. And so that is going to be either debt or equity, right? Those are the two general classes of external financing. Debt would be any kind of loans, any kind of bonds, whether it's from banks, other financial institutions, from the bond market. And these are all contracts in that you have to pay back principal and interest over time based upon what the contract specifies. And those payments are legally required. If you miss them, you can be taken to court, right, for not paying. One advantage of that, of debt payments, is that the interest expense is tax deductible. And so it's before the net income. Or right now in my company, in my cupcake company here, I own all the equity because I have put in all the funds and I have not given up ownership to anybody else. But if I need external financing and maybe I've already utilized a lot of debt and I want to continue to grow, I may have to turn to additional equity. And so the point is, I'm going to sell shares to others. Maybe it's people I know, maybe it's people I don't know. And if it's privately held, then all of the, well, so it's not so much privately held. They're all privately held in the United States in capitalism, but we use those terms, you know, that you're a public firm or a private firm. In China, those mean very different things, right? A public firm has significant or maybe sole government ownership. But what we usually mean is that a public firm or is one that is publicly traded. Its shares are publicly traded. And a private firm are ones where its shares are privately held and privately traded. So they're not traded on any kind of a stock exchange or anything like that. And so they're traded just in private markets, really. And so in your business, if you sell equity, you are very likely selling it to other private shareholders. But what you're doing is diluting ownership. You're diluting some of your control over the business, and you're paying dividends. But, pardon me, but the dividends that you pay now have to be shared, right? They can't simply be all taken in by you because you don't own all the company. If you sell 20% of the company, then 20% of the dividends have to be given to the other shareholders. Dividend payments are not required, but I'm sorry, but usually expected, right? Usually the shareholders expect payments. And so you try to make that happen. You can also give equity shares to your employees. And a lot of times you might have a manager. So suppose that I start this bakery and it outgrows what my wife can bake, for example, and what she can do in terms of hours worked. And now we need to hire managers. Well, a manager is not going to have the same incentives to run the business as well as my wife does, right? Because she owns the business. And so we call that, it's an agency or agent problem. And so one way to more properly incentivize the managers is to give them shares, small shares usually, but still shares of the company. And so they act a little bit more like owners would, right? So think about it. If you are, if you own your own house versus renting a house, how well do you take care of the house? If you own the house, you repair it when it needs it. You fix things when they're broken. When you rent the house, you break things, right? And you don't care as much. And so if you give some ownership in the property that you're renting, maybe the renters would take more care of it. Of course, that doesn't usually make sense to do, but in terms of a business, it does, because managers now act more like owners, and they'll figure out ways to enhance sales, to cut costs, to do things efficiently, okay, and for the sake of the business. So just kind of concluding thoughts on all of this. What are the main takeaways here? Think logically and carefully through your project's finances in the same way that you think about your cool new product. And one of the mistakes that a lot of people do is they spend way too much time on their cool new product and not nearly enough time planning how the business is going to run, right? Because it's a lot more fun to do this, especially for very creative people that would go into their own business. But you have to do both. And if you're not good at it, outsource it, right? Let someone else do it and think about these things. You have to pay them, but it, it's worth it rather than not thinking through these things. Project your income, project your cash needs. Determine whether or not you need external financing. And if you do, don't give up equity. Go for debt first, right? That's almost always makes sense. Don't give up equity and control unless you absolutely need to in order to meet the need for growth or to incentivize management. There are exceptions to this, of course, but for a small business, for example, that's just starting up, don't give away equity so quickly. A lot of times it's easy to say to somebody, oh, if you do my accounting books for me or handle the marketing, I'll give you 5%. Wow, well, that's generous. And if the company hits it big, that is quite a bit of money for someone who's doing the accounting books, when you could ultimately just hire someone to do those books for you. You want to give up control only when you need to, right? In terms of being able, the need for growth, the need for financing, or you want to incentivize people to act more like the owners and less like employees, right? So those are the key points I wanted to get across, and hopefully that has been at least somewhat successful. I do think, Stacy, we're coming near the end of the time, right?
Yeah, we are. So we're going to open it up for questions here in a minute. Just a quick note, following up this next week, we have Rogelio and Cash here, and they're going to be doing sources of funding for entrepreneurs. So if you're starting to think like, oh my gosh, now I'm looking at the fact that I need external financing, or I'm not sure where to even begin, they're going to start tackling that next week. So just a little plug for them to come and listen. It's a good follow-up to this one. A thank you to Tim for being here. Thank you so much. And a quick note that there is a survey there, if you don't mind filling it out at some point to just give us some information about our workshops. We always like some feedback from you. And with that, we'll just open it up. If you have any questions, feel free to ask away here. As Tim said, unmute yourself, just shout them out. And we'll be on for a few minutes if anyone wants to stay on and doesn't feel comfortable asking in front of a large group of people. So with that, we'll pass it back off. If anyone has any questions, you're getting lots of thank yous in the chat.
I have a question, if
Okay.
that's okay. So yeah, I'm one of those creatives that you were mentioning earlier, that I'm clueless about business.
Yes.
I care too much about the craft and became really good at that, but I suck at all this financial planning, regretfully. So I got a question for you. If instead of a product like the cupcakes, what I am providing is services, what can I use as that unit? Like how do I measure my cupcakes?
Well,
Is like hours or per project, or what is
it depends on the service that you're providing. So if you don't mind, if you don't want to, you don't need to, but if you don't mind, share with me a little bit about what your business is going to be doing.
Yeah, so it is user experience design services and some front-end development. So somebody comes to me, they tell me what kind of app they want to put together for their own purposes, and then I design it, and then I code part of it too.
Okay, so you design it, and then you said build part of it, and then maybe outsource the rest of it. Is that the idea?
That's the idea, yeah.
Okay, so my first thought is that you would be paid based upon the hours that you work. And again, if you are distinguishing your ability to conceptualize the needs of the people that come to you. So what kind of software can you build that will benefit them the most? Because they're going to explain to you what you want, but you know that there's lots of potential ways to get that done. And so what's the most creative, best, most efficient way to do it. Well, that's part of the labor, right? And that's part of your skill set. And so the other part is actually doing the programming. And so you, to me, your service is the number of hours that you put in. And that would go with a, kind of a creative bonus there. Now you have to know what your competition does, because what if your competition says, hey, we're going to supply these types of apps, and they kind of have, let's say you can categorize app development into something like simple, intermediate, and complex. And you say, okay, this is a simple app. And so maybe your competitors will say, okay, well, for $10,000, we build simple apps, right? Whatever those are considered to be. And so you would have to probably price in that same arena. And so the problem with services is that, look, I can bake a cupcake and set it in front of you, and you can tell me if that cupcake is any good very quickly, even by looking at it a lot of times. But software code, especially if people don't know anything about it, they can't assess it. It's like going to the doctor. It's kind of a crapshoot at first. You don't know if you're getting a good doctor or a bad doctor or an attorney. And so paying someone like that by the hour is a little more risky, especially if they don't have a reputation. And so I think that you would have to decide what the market is, what the market competition is in terms of pricing. And you may have to, in some cases, price by the product overall. And then if you end up spending more hours on it than you estimate, you eat those costs, unfortunately. But sometimes it'll be the reverse. On the other hand, if something is really complex and it is not something that you can say, oh, well, I'm comfortable just charging 10,000 for this, right? I don't know how long this is going to take. Then you're more likely to want to charge by the hour. So maybe the attorney business is not a bad one for you to look into in terms of pricing, because they do those things too. How much is a will? Oh, the standard, $500. How much is it to, sue this company for patent infringement? Oh boy, that's complex. So maybe you bill by the hour. So I don't know if that helps, Gilberto. Does that answer your question?
Yeah, that makes a lot of sense. I keep hearing this concept of value-based pricing. It's hard for me to wrap my head around it, but it's basically like if I talk to Coca-Cola, I supposed to ask them, this work that I'm going to do for you, what is the impact that it's going to have on your bottom line or overall sales strategy? And they supposedly are going to tell me $1 million, and then I would base my price on that, right? Do you have any thoughts or about this kind of pricing model?
For small businesses, I don't see that working.
Right.
For large businesses, maybe, but what kind of incentive does Coca-Cola have to give you an honest answer?
Exactly. Yeah.
And honestly, they may not know. And again, think about an attorney, So what is the value to the attorney's office, the lawyer's office, for taking this case? They're
right.
not. And so maybe, well, let me turn that around, because really what you're saying is the attorney would say, what's the value for you in terms of suing these people? And
exactly.
That doesn't always work. I mean, so here's the way to think about it. In terms of economics, there's this thought of consumer surplus. And so the question is, okay, I might pay, what's a good example? I might pay $800 for a new laptop. But what's the value of it to me? And the value of it, if I didn't have a laptop, that would be really bad, right? So maybe if there was one laptop left in the world and I needed it, I might be willing to pay $20,000 for that thing. And so the value of it is actually quite high, but I only pay 800 because the market has supplied a lot of these things. And so the framing that you have given for the question is really where you are asking the company, what is the total consumer surplus? What's the maximum that you might be willing to pay for this product, because it's going to help you out in your business, it's going to make you more efficient, save you costs and whatever. And so, first of all, they're not going to tell you an honest answer. Second, they may not know. And third, the competition is really the more relevant pricing, because if you give them an answer that's absurdly high, they just go somewhere else, right? So I'm not super convinced that this whole value question is the right way to go. I think it's more about the market. What's the market doing in this arena?
Yeah, it makes a lot of sense. I really appreciate your thoughts. Thank you.
You're very welcome. What else? Other questions, thoughts, comments?
Yes, a small one. So I have a question. First is, what would you recommend to start with? What kind of financial document if my enterprise is nonprofit? So I just need to understand how much does it cost and how much I need to find, let's say, fundraise or whatever. And I have a second question. So
I'm sorry, what was the question though about that one? What was the first question?
How I can start? What kind of document to start with? Because I mean, I don't have really income, so there is maybe no sense for me to create an income statement. So how would I start with financials in nonprofit?
Okay, well, nonprofits do have income statements, absolutely. And nonprofits have to do the same financial planning, even more so than for-profits, because it's harder to survive by definition as a nonprofit. Nonprofits tend to sell things, their services or products way below cost, or they tend to give them away. But yet many of the costs, even though they might be lower if you get volunteers and all that sort of thing, many of the costs are still there. And the need for funds are still there. So going through that same, suppose that this cupcake business was nonprofit, I would have to do the same thing, right? And one of the differences is that your mission is going to be much broader, but in all else equal, your revenue is going to be lower and your expenses may or may not be lower. And so you still need to carefully go through and do these things. Now, where do you start with funding? Okay. You need to know how much, because if you go to any grant organization, you write grants, you need to have a very carefully thought out document, a grant request that shows your projected revenues, it shows your projected expenses, it shows the services or goods you're going to offer and the impact it's going to have on your community. And but then also, what kind of financing do you need, right? And you're right that you may not have to put up as much, and maybe not any of the funds, depending on how good you are at fundraising. You may not have to do that as much, but you still have to sell your product, I'd say, even harder, because the universe of people who are willing to give grant money or donations is smaller than people who are willing to buy stocks and bonds in companies and make money from that, right? Get returns from that. So you still need to go through and do this planning process. And then you need to look for alternative sources of funds through grants, through churches, through, community foundations. One of the reasons why I'm so big on this, on Fayetteville and the MSA, the whole area, is because the Walton Family Foundation has put just enormous amounts of money into this area in the last 20 years, really, and they're doing it in a really smart way, and they're trying to build community, which many of our suburbs we've lost, right? They're trying to build community. They're trying to make this a really good biking city, a good small airplanes, basically anything the Walton grandchildren are interested in, right? And it's not just going to be second or third class. This is going to be the best in the nation and maybe the best in the world when they decide to do something. And so they do have a lot of money, and they look for ways in order to give out the funds that are going to make a difference. And so let's suppose you were pitching to them. You would have to convince them why, and of course I have no idea what your idea is, right? But you would have to convince them that your idea is going to have a big impact on a lot of, let's say, low-income people in the area. And it's going to be better than other ideas. And they're tough, man. They're not that I pitched there, but they're tough. They do not just accept any kind of ideas and vision. If they're going to put their money towards something, not only does it have to be a great idea, they follow up and make sure that year after year, you're doing what you said you do and you're getting good results. You have to prove your results. The Gates Foundation, it works the same way.
Thank you.
You're welcome. Even for not-for-profits, I think it's harder than it is for profit. You have to be really careful about your projections.
Yeah, I noticed that it's harder to build something non-profit.
But it's wonderful. It's also more rewarding. It's more rewarding for your soul, right? It's worth it. Other questions? Anything else?
Well, while you were talking, I was typing this thing out, but I guess since we have a break, I just want to say thank you. I have to go though. I wanted to listen to all the questions and hear what you had to say to everyone else's answers. But yeah, I just want to say thank you. I hated my accounting class, and you just kind of made it a lot easier and to understand, and broke it down a little bit for me. So
okay, yeah, go back and look at that stuff again, and it'll probably make more sense, especially people that even business students. You take accounting 1, and it's a lot of material they throw at you. You then start thinking about your own business, and now all these things are going through your head. Well, the nice thing about accounting is that it shows you how to organize it all. And now you go back and look at that stuff again, it's going to make a lot more sense. So glad that was. All right. So I'm telling you to read your accounting book. That's not good.
Yeah, I don't think I even got the book. I think I used one of my friends. So
you know what?
I don't think that would help out too much right now.
Well, I'll tell you, every business needs an accounting book near them. If there's one class that non-business students, business students obviously are required, but if you're not a business major or not minor, if there's one class you need to take, it is accounting 1. Okay, and it might be killer for you, so boring, and you can't barely make your way through it. But it is critical. It is just so important for you to get that discipline and get that knowledge.